Elevate FinTech Online Bank, which is officially slated to launch in the US and Canada in 2026. If you've been paying any attention to the financial sector over the past decade or so, you already know that traditional banking is completely being turned on its head by these agile, digital-first platforms. So today, we're going to look strictly at the numbers, the infrastructure, and honestly, the most exciting part, the exact mechanical structure of how this upcoming launch is designed. We'll be breaking down the documentation to see exactly how a massive, sweeping market trend is colliding with some really incredible new technological frameworks.
Here is our quick roadmap for today. 1. The massive fintech boom. 2. Introducing the virtual bank. 3. Built on safe foundations. 4. Next-level customer services. And 5. The income wheel opportunity.
Okay, kicking things off with Section 1, the massive fintech boom. Unpacking a historic wealth shift. We are starting right here with the macroeconomic data, simply because the financial landscape is undergoing a systemic transformation right now. You literally cannot grasp the scope of what's being projected for 2026 without first taking a step back and measuring the sheer size of the overall playing field. $510.3 billion. Let that sink in for a second. That staggering number is the projected size of the North America fintech market. We are absolutely not talking about some niche industry or a passing technological fad here. We're looking at over $500 billion shifting definitively into digital financial ecosystems. To put that scale into perspective, this represents tens of millions of everyday consumers actively ditching traditional brick-and-mortar bank branches. Instead, they're opting for the speed, the low fees, and just the overall convenience of managing their entire financial lives straight from their smartphones. But you know what's actually wild? It's the velocity of that growth. It's one thing for a market to be large, but it's an entirely different story for a market of this massive scale to be expanding at a 24.5% compound annual growth rate. This data projecting from 2025 all the way to 2033 shows a steeply climbing staircase. To sustain a growth rate that high over an 8-year stretch means consumer adoption is accelerating like crazy. By the time the ACN Virtual Bank launches in 2026, the overall market momentum is going to be moving at an incredible pace. Understanding this timeline is absolutely crucial for grasping why this specific window is being targeted. And we can see this massive consumer appetite by looking at the scale of existing multi-product ecosystems out there right now. Take Cash App, for instance. 58 million monthly active members processing $283 billion in inflows in 2024 alone. Or SoFi, with 12.6 million members driving nearly $1 billion in net revenue in just a single quarter. Then there's Chime, generating $1.67 billion in primary banking revenue with 9.1 million members. These companies have already proven beyond a shadow of a doubt that consumers eagerly want these digital-first ecosystems. The documentation clearly shows that ACN is stepping into a space that is highly validated and already mapped out by current industry giants.
Moving right along to Section 2, introducing the virtual bank, the 2026 launch. Let's see how ACN is preparing to step directly into this booming $500 billion market with their own custom-tailored solution.
So the core target through ACN Elevate is bringing a truly comprehensive fintech ecosystem right to the palm of your hand for that 2026 rollout in the US and Canada. The strategy outlined is a seamless, all-in-one integration. It merges digital money management, automated around-the-clock customer service, and secure instant identity verification, all housed inside one highly intuitive mobile interface. It's essentially taking the entire banking experience, the whole shebang, and condensing it into brilliant software.
The absolute crucial point here is that this isn't just about offering another basic, standalone financial service. It's about fundamentally removing the friction from a customer's daily banking experience. In traditional banking, friction means waiting in physical lines, waiting days for your own funds to clear, or navigating really clunky, outdated web portals. The stated goal here is replacing all that friction with technology, making the act of managing your money easier, faster, and objectively better through advanced engineering.
Which brings us to Section 3, built on safe foundations, trust, and security. Because let's be real, the immediate question you'll get when discussing any new financial tech, and rightly so, but is it actually safe? Trust is the absolute currency of banking, no matter how cool the technology is. Let's look at how the biggest names in the industry handle this exact structural challenge. Major players you use every day like Visa, MasterCard, Zelle, PayPal, and Venmo, they don't actually hold their users' money in some proprietary secret vault. Instead, they operate on a partnership model with traditional, highly regulated sponsor banks. Visa and Zelle work with massive institutions like Bank of America, Chase, and Wells Fargo. Venmo uses Bancorp Bank. The source material indicates the ACN Virtual Bank is going to utilize this exact same established structure. They provide the agile, super user-friendly technology on the front end while securely partnering with a fully established sponsor bank on the back end to handle the actual holding and movement of the funds.
And this structure means that end-user funds are protected by the exact same strict financial authorities and federal insurance that govern traditional brick-and-mortar banks. In the US, that means being fully FDIC insured. This provides a total, uncompromising layer of peace of mind. It ensures that consumers aren't asked to take a wild risk on some new, unregulated entity. Rather, they are being offered a vastly superior technological experience that is layered securely right on top of the established, federally regulated banking system.
All right, Section 4, Next Level Customer Services, Beyond Basic Banking. Now that we've established that unshakable foundation of safety and regulatory oversight, let's dig into the actual financial products being offered.
The source material outlines a massive portfolio of diverse services designed to cover literally the full spectrum of a customer's financial life. Yes, of course, they get standard checking and savings accounts where they can earn interest. But notice the card tiers: regular, metal, platinum, and black cards, bringing a really premium lifestyle feel to the digital wallet. Going much further, the platform includes wealth management tools, financial education products, cross-border remittance services, and credit builder products. It even scales all the way up to major life event financial products like home mortgages and business loans. It's an entire financial life cycle, all accessible under one digital roof. When you place this robust ecosystem of features right next to that massive market valuation we discussed earlier, you see the exact disruption the sources are projecting. You have a $500 billion market actively hungry for digital solutions, and this launch is answering with a suite of products designed to go toe-to-toe with, and often completely exceed, the offerings of the current multi-billion-dollar fintech unicorns. It's the perfect convergence of a validated market need and a comprehensive product suite. Finally, let's hit Section 5, the Income Wheel Opportunity, how IBOs earn. Let's dive into the climax of our explainer, the mechanics of the opportunity itself. How do independent business owners actually generate revenue from this secure, feature-rich ecosystem?
Well, the mechanics of this model are pretty unique. Based on the documentation, you aren't just earning a one-time bonus for a quick customer sign-up. You are earning a percentage on the everyday habitual financial behaviors of the user base. Think about that. You earn a percentage on the interest those customers are making on their deposited money. You earn fractions when they swipe their debit or credit card at the grocery store or the gas station. Revenue is generated on annual card fees, on standard ATM withdrawals, and yes, even on those major life events, like when a user secures a mortgage or a business loan right through the platform.
Let's break down how this builds into a really predictable system. The mechanics follow a super simple, highly repeatable sequence. Step 1, money is deposited into the user's account. Step 2, the IBO is paid on that account activity. Step 3, the customer just organically spends money on their everyday purchases like they always do. Step 4, the IBO is paid a percentage when that money is spent. And finally, Step 5, the IBO builds an organization of team members and customers, allowing this entire transactional cycle to just repeat and scale outwardly.
Which brings us to the ultimate vision outlined in the data, the ACN FinTech Income Wheel. Notice how seamlessly all these elements connect to create a continuous feedback loop. It's a repeating cycle of initial customer acquisition, everyday organic spending, and ongoing revenue generation. Unlike a traditional sales business where you have to constantly convince someone to go out and repurchase a physical product, banking is an automated daily behavior. People deposit, they spend, and they borrow without ever needing a reminder. As an organization grows around this wheel, the whole model is designed to turn these everyday, automated financial transactions into a sustainable, scaled revenue stream.
So let's bring it all home and summarize our deep dive into the source material. The timeline is definitively set for 2026 in the US and Canada. The massive $500 billion market is fully validated by explosive historic growth. The infrastructure is totally secured by strict FDIC insurance and heavily regulated back-end sponsor banks. And finally, that income wheel is structurally designed to turn every